Hello traders, this is Rich from TradeSight. This is our market preview for the coming session. This is going to be for Wednesday, July 3rd, 2013. Right ahead of the holiday here, I just want to say thank you to all the servicemen and women out there and also all the families who support them. We appreciate everything they do for us here. I know it's not Memorial Day or anything like that, but our thoughts are with you, and we appreciate everything you do for your country. Today was kind of a sloppy day at best. The S&P was about unchanged on the day. Nasdaq was up a little bit, showing just an eking of relative strength, and the Dow Industrials were lower on the day. Internally, the market was negative, and I think that's really the big takeaway here. But we'll take a look at that in a few minutes. But first, let's get to the major futures contracts. Let's take a look at the ES futures first. All right, so here's a look at the ES futures. You can see that it was another distribution day. They opened the market about flat. They pushed it up towards the 50 DMA, which was also the area of the previous day's high, but it found selling there and ultimately rejection, and basically settled just barely higher on the day. So that little camouflage sell signal was a good indication that today was not a day to be accumulating stocks looking to make money. What we did was we really just had another day where we're kind of grinding here. One point I want to show is that if you look just above where the line is from my cursor, we've got nothing but tails up there. There's no closes above 1609. So 1609 right now is a little mini wall for the market, at least on a settling basis. Pushed up here to the 50, 1625 remains serious overhead for the time being. To the downside, 1593.75 is near-term support. Then we've got this gap fill here that's also coincident with the static trend line that's going to be in play if we come into 1580, about 1580 and a half. So definitely keep that in mind. Day before a long holiday like that, it's kind of a wild card this time. Usually you want to go with the direction of the trend. The trend has essentially been lateral, so there's really no trend to go with. So in light of that, ahead of a long weekend, it's going to be a light volume session. Probably see some early volume off of the ADP number, which is going to be released, and then the ISM number, and then after that, we'll have to see if they're going to hold whichever way they move it. But I expect the volume to probably tail off fairly early. There's usually three key thirds to the market. There's the first third of the market, which trades off the initial orders. Then there's that middle third, which is the lunchtime doldrums, light volume, and then there's that second third. That second third is really the setup for the next day, depending, what do they want to do for the next day, how do they want to handle that. So I really kind of think that we're probably going to have a first third of the market, and then we're going to have light volume through the second and the last third of the market as well tomorrow. So definitely be prepared for that. Moving on to the NQ futures, Nasdaq side, similar design to the market. Opened relatively flat, pushed up to the 50 DMA, found selling there, and again, just kind of nowhere. Right now we're just between the 10 and the 50 moving averages right now. We did close a little bit above the open, which is a little bit more positive than the Nasdaq side. The overall bias is to the upside here, obviously, but fraught with distribution. Look at these long tails where the bulls put money to work and can't hold price. So that's definitely cause for concern. We have not been able to close back up into this gap here. This gap remains really unchallenged, at least on a closing basis. So overhead, we've got resistance at the 50 DMA, high from 2 days ago, and then ultimately this gap fill at 29.58 is going to be pretty key. To the downside, 28.90 and a half is going to be support at the 6/8 level here. All right, here's a look at the cumulative advanced decline line, which I still believe is the most important chart out there right now. You can see that we took a little bit of a bump down on the New York side, still below this trend line. The Nasdaq side also took a little bit of a bump down here and is still unable to get through this level. If the Nasdaq does pivot and break out above this level, that's going to be really, really notable. But for now, that's still the line in the sand for the bulls. They've got to take that. If they don't take that, the market remains internally negative. We had negative internals on both sides as far as the advanced declines go. We're only minus a few issues on the Nasdaq side, but on the New York side we're minus 660. And keep in mind that was minus 660 issues, while the overall S&P was still higher by just a fraction on the day. Definitely not a positive sign for the market. If you're scrounging for something positive to point to in the market, the one thing you can say is that right now the banks, the financial markets the financial type stocks are definitely outperforming the broad market. Here's a look at the BKX versus the S&P. The BKX is the blue line. You can see that it's actually up in the area where it can challenge the prior high. The S&P, which is the broad market here represented in the red line, is clearly in a distribution phase. So the one positive is that if we can break out to new highs in the banking index, that's really something that the bulls can point to and possibly build on. But until that happens, this remains a little bit suspect, a little bit sketchy. All right. So as far as the individual sectors go today, the computer hardware was the strongest on the day. Definitely outperformed the broad market by a decent amount. It is 12 days up in the seeker count, so that's definitely something to be aware of. The BKX also outperformed the overall market, but we're 12 days up in the seeker count and also 12 days up in the Comer. On the downside, the XAU, after having a decent performance last couple sessions, was pretty weak. By far the weakest sector, losing 4%. Airlines were weak. Defense was weak. The housing was weak too. The housing sector is definitely a little bit concerning. The only positive thing is there's a 13 exhaustion in place now on the Comer count that really hasn't made good on itself yet. So that's actually in a spot where it could possibly pivot from. So we'll have to stay tuned and see if they can do something positive there. All right, so here's a look at the housing index, the HGX. We had a 913.9 to the upside. Here's 9. Here's your 13 exhaustion. We rolled to the downside and then did this other 9 to the upside here. So that was kind of a double signal that we did use and this rolled over very hard. Then we did a 9 to the downside here. Those are the green numbers. That's the setup phase. And then a 1 through 13 in the Comer countdown, and ultimately found this pivot point right here for exhaustion. We going back to the upside here, but we had this high close. We have one close above the 10 EMA, and that's it. We haven't had a follow through close above the 10 EMA yet to make good on this 13 exhaustion warning. So for now, this remains to the downside. You can see that right now they're still just gaining this 200 DMA, but haven't really been able to really do too much to build on top of it. The zero base line is 175. That's going to be key support. So if you're housing centric or leveraged to housing, that's going to be your line in the sand, the floor. If we lose that for a second time here after settling below it to produce this 13, that's going to be problematic. It may wind up being more than just a retest of this low. If we can take out this 1/8 level here, which was the high close, and pivot back to the upside, we're going to put this 50 DMA back in play at 193.75. And here's a look at the XAU with the Comer. The Comer is 11 days down in the XAU. Just potentially, waiting for that 13 to print. We're gonna have to get a little bit more extension. Remember, to get a 13 to print, we're gonna have to settle below this 11 low and start getting down a little bit closer towards the 75 area, which hasn't happened quite yet. All right, so getting back to our regular charts here with the seeker on them. Here's a look at the gold futures. The gold futures are still basically hovering around this 1250 area. Had a little bit of a measuring day today. They reached up and attempted a little check-in at the 10 EMA, but it was rejected. So we really have to see if they can build on this to the upside. We did have this 9 days down that just completed, so we're trying to pivot off of that. Remember, 9 days down is not the same as an outright exhaustion here in the seeker countdown. So still potentially waiting to pivot here, but haven't really gotten that real strong 13 exhaustion from the more important countdown phase. The other thing I want to take a look at here is going to be the oil futures. Oil futures broke out and made a new closing high here on a settlement basis. This 100 level is going to be very big. That's an 8/8 level on the Murray Math box. This time it's going to be unencumbered by 9 bars up. Last time we tried to get up here, we were 9 bars up. They swept a little bit higher, but we weren't really looking for it to advance and make it much higher. But today we did get above that area and get to that 100 area, and we're only 5 bars up in the setup phase. Keep in mind that this is happening in the face of a fairly strong dollar. Dollar's been on the rise, so this is showing some real organic strength, albeit it may be news driven with what's going on in Egypt and elsewhere in the Middle East, but nonetheless this is moving higher, even on a higher and stronger dollar, and we're up here to challenge this 100 level, only 5 bars up now. Gold futures, wrong chart, check that. I want to look at the TLT, excuse that. Here's the TLT. We've got our 13 exhaustion in place on the seeker count. We're now trying to pivot and break above the 10 EMA. Right now they're gaming the 10 EMA. If they release above that, which they probably should do, since we have this 13 exhaustion in place, we're going to put this 4/8 level at 112.50 in place. So definitely something to keep in mind going forward. All right, folks, as always, thanks for listening. This has been Rich for TradeSight. Happy 4th of July to everybody, and hope to see you again soon.